Good afternoon and welcome to the SRA's Accounts Rules Update with me, Jatinder Loyal, Policy Associate in the Regulation and Education team. Key focus today is just to give you a quick update on some of the key changes to the accounts rules and things that we want firms to think about before we launch on the 25th of November. The new accounts rules, they're clearer, sharper, setting the standards that we expect of law firms that are holding or receiving client money. We also provide clarity in the rules in terms of who the rules apply to and reduce some prescription that sometimes stands in the way of good practice. The new rules also focus and provide some clarity around the definition of firms using a TPMA, a third-party managed account, and then the role of the reporting accountant as a key check in making sure that client money is being kept safe, and then a final review of when we will ask for a report when a firm either ceases to authorise cease to carry on as an authorised body or stops holding client money. Looking at the safeguarding of client money, one thing that's key is that firms have to make sure that the money that they hold on behalf of a client is kept safe. This is something that we've introduced in the Code of Conduct for solicitors. So the individual Code of Conduct, there's a requirement to make sure that money that's entrusted to the solicitor is kept safe. So this is a key requirement within the Code of Conduct. The accounts rules then go further to clarify that law firms then need to make sure that the money is kept safe, and how they do that is up to you as a firm. But what we expect as a minimum is that firms must manage client money promptly, and the movement of money must be done promptly. Firms can exercise their professional judgment in terms of how they make those decisions, and the key is that they develop their own systems and controls to make sure that client money is kept safe, but also that clients are kept properly informed about how their money is being managed. Client money, where are we now? So what we have is a revised, simpler definition of client money. This is now in Rule 2.1 of the accounts rules. What it provides for is clarity in terms of what we deem to be client money, but also provides an exemption for firms that are only holding or receiving money which is for their fees or disbursements which they're liable for to use, and the exemption in the accounts rules which means that they can move this money into their business account. This only applies where the law firm is only holding that type of money. If it can't be the case that you're holding fees and disbursements for one client and transactional money for the other client, that you rely on the exemption. It's a business model. It's the way that you operate as a business, which is why we've said that all of the money that you hold or receive has to be placed in a client account as now. Key is therefore then that you keep client money safe. The firm must take every single step it can, but also make sure that it's got sufficient systems and controls in place to make sure that the client's money is kept separate from the firm's money. There should never be a situation where client's money is mixed with the firm's money. As soon as you identify a situation where you do receive mixed money, so you do receive client money into your business account, you need to move that money promptly. There are risks with you holding client money in a business account. It can be used for purposes for which it was not ever intended, and this is something that we want to make sure that firms understand. In terms of moving money from a client account into the firm's business account, again, it can only be taken after you've issued a notification of costs or delivered a bill to the client. Now, a notification of costs can be delivered through the course of a transaction. You don't have to wait until the end of completing a matter, so it's quite key that you agree with the client methods of communication in terms of how you will update them in terms of how their matter is progressing and the costs that have been incurred. Key to remember is that once there's no reason for you to hold the client's money or to receive any client money, is that it's returned promptly to the client. What we don't want to see is firms holding residual client balances for a number of months or even years after the matter has come to an end. So it's key as part of your engagement with the client and ensuring that you've got in place proper systems and controls, that you have effective methods of keeping in touch with the client, but also making sure that you have up-to-date records about where they are and their preferred method of communication. Something that's quite key in terms of the risks associated with holding or receiving client money, firstly, is that the new rules provide confirmation, as do the current rules, is that your client account can't be used as a banking facility. In August last year, we issued an updated warning notice together with some case studies. Those case studies and the warning notice will apply under the current rules as well, and the new rules going forward. So it's important that people read the information that's been provided. Another key risk in terms of holding or receiving client money is the fact that you are prone to a cyber attack. These attacks are on the increase. Those that are attacking law firm client accounts or law firm systems and controls are a step ahead of you and of us here at the SRA. It's therefore important that you have in place proper systems and controls that are effective and robust to manage a cyber attack. Key to remember is that withdrawals from a client account can only be made for which the money is held. So if you're holding money to complete on Tinder's conveyancing matter, then the money should only be used for that purpose. You shouldn't be using another client's money to complete on, for example, my conveyancing transaction. Therefore, you need to make sure that you've got in place systems and controls to firstly make sure that any withdrawal from the client account is properly supervised. We're saying appropriately supervised in the rules and appropriately authorised. It's not always the case that the Compliance Officer for Finance and Administration should bear the responsibility for making sure that these withdrawals are appropriately supervised or authorised, or even the senior partners in the firm, because the accounts rules are quite key in that they apply to everybody in the authorised firm, its managers, owners and employees. So it's key to make sure that you have in place proper people, the right people that understand the risks associated with holding and operating a client account, that are there to make sure that the withdrawals are properly supervised and authorised. Residual client balances, I mentioned before that we see a number of cases referred to us either to the professional ethics team or through our forensic investigations team, where we see law firms holding on to residual client balances for a number of years. Residual client balances can only be withdrawn on the SRA's prior authorisation or in prescribed circumstances. You might have seen in the new rules that we set out that client money can only be withdrawn in prescribed circumstances. Any money over £500 that's sitting in a client account can only be withdrawn on making an application to our professional ethics team. Anything under 500 will be set out in the prescribed circumstances, and we're hoping to have those prescribed circumstances published on our website in the next few months. Putting things right. This is something that's quite key in order to make sure that clients are not affected by anything that's gone wrong in your firm. Any breaches identified must be corrected promptly, but the key here is that the next step, which is that if there's been a loss of money or money has been withheld from the right client account, then that needs to be replaced immediately. So there is a slight difference in terms of identifying breaches promptly, but then once those breaches have been identified, especially where there is a loss of money, that the replacement of money happens immediately. Together with this then, firms need to consider their duty to report to us. We consulted on reporting concerns to us, and it's key that you read the expectations that we have of you in terms of what you need to report to us. It's not for you always to consider whether or not there has been a breach of the accounts rules. It's something that we have to consider when we receive information from you. It's therefore key that you also look at the requirements and the standards that are set out in the Code of Conduct for Firms, which clearly put an obligation on you as a firm to make sure that you have effective systems and controls. The checks and controls in terms of the client, in terms of client money and you operating a client account are quite key. Rule 8 sets out the requirements, and it's quite clear that what we expect of you as a firm is that you keep records that are accurate, contemporaneous and chronological. It's quite key for you as a firm that's holding or receiving client money to show effective compliance, but also good record keeping. Firms are required to keep ledgers, obtain at least monthly statements or at least every 5 weeks, and you must be carrying out reconciliations every 5 weeks as well. So that's making sure that you reconcile information on the ledgers, your monthly statements or 5 weekly statements, and then your cash book balance. It's important then to make sure that those records are kept in a way that are accessible, not just for you as a firm, but also if you are under an obligation to have an accountant's report carried out. You may have also seen that we've introduced requirements around safeguarding client money where you're operating a joint account or the client's own account. This is again something that we're concerned about, where we need to have a level of control and making sure that law firms are operating these sort of accounts in a compliant way. We have issued some guidance on the requirements when you are operating a joint account, and we're looking at what guidance or support we can provide you in terms of where you are operating your own clients, operating a client's own personal bank account. Something that's new in the rules is us confirming the position in terms of third-party managed accounts, or TPMAs for short. There's nothing in our current rules which prevents you as a firm entering into arrangements where where a TPMA is being used to hold and receive the client's money. We issued some guidance back in December 17, and that guidance is still valid and can be used for firms that are considering this as an option. Again, we've issued guidance as part of the new standards and regulations and as part of the new accounts rules, guidance on TPMA. So it's updating guidance that was previously issued, but now with reference to the Code of Conduct for solicitors and the Code of Conduct for firms. We know that there are a number of firms that are also looking at TPMAs now as an alternative to operating a client account or receiving client money. This is a solution for them, and it's not just the big firms, it's some of the smaller firms that are only receiving small amounts of money or occasional amounts of money depending on the areas of work that they're involved in. A key thing to remember here is that we don't regulate the TPMA provider. What we've set out in the new rules is that they have to be authorised and regulated by the Financial Conduct Authority and have to have signed up to the Payment Services Regulator or the Voluntary Code of Conduct that's in place there. So it's quite key in terms of protections and what you tell your client. If you haven't seen the guidance, please have a look at the guidance, like I said, that was issued in December 17, but that has been updated just a couple of weeks ago. The role of the reporting accountant is quite key in terms of providing you and us as the regulator with that secondary check to make sure that client money is being kept safe. A key role that the reporting accountant plays in providing that check is not just saying that there has been a breach of the rules, but identifying where there might be a risk to client money, and this is quite key. We need to be made aware of where there are circumstances or situations where client money could be at risk. What the reporting accountant does is make sure that if there are risks present in a firm, it's setting out then how the firm is making sure that those risks are never crystallised, i.e. so that the money is never stolen or there's been no failure to account on behalf of a client. What the reporting accountant does will be up to them in terms of the nature of the work that the firm carries on, the size of the firm, but also the amount of money that is passed through the law firm's client account. How they engage with you and how you engage with them will be dependent on the relationship that you form with them. What we have said is that there is less prescription in terms of what we expect from reporting accountants. So it's key that they will now be using their professional judgment, as was set out in the guidance that we issued in November 2015, saying that it's up to them to use their professional judgment in identifying where there has not just been a breach, like I said, where there is a key risk to client money. Moving on, final reports are key, especially where law firms are ceasing to be authorised as a law firm and regulated by us. This is a check that we have now introduced, so it's not an automatic requirement that a law firm has to submit a cease to hold report within 6 months of the date that they stop receiving or holding client money, or within 6 months of being an authorised firm. The rules have now been drafted so that it's up to us as the regulator to ask a law firm to obtain and deliver a report as and when we see necessary. The information that we ask from firms on closure is very different to how it used to be. We're now asking for real-time information, so we're asking for details of your reconciliations, we're asking for details of your bank statements and the balances that you hold, and if you still hold balances, what you're doing with those balances. This is a key step that was made, or a key change that was made last year in preparation of the new rules, the new accounts rules, and the should we say the power that we have now to ask for a report when it's necessary. Factors that might influence our decision are going to be things like where there are inconsistencies in the information that's been provided on a firm's closure notification, where there are open conduct or regulatory investigations, or where the firm has previously received a qualified accountant's report. These are all factors that might influence our decision to ask you to, one, obtain, and second, deliver an accountant's report. Guidance and support for you. Hopefully you will have seen the information that we published on our website a couple of weeks ago, which includes some guidance on the new accounts rules. It's there to help you. We've provided some Q&As on firms that want to rely on the exemption set out in Rule 2 of the new accounts rules in terms of what it looks like, what you should be telling your clients and what you need to be telling us, but also how you manage the risk in the sense that you are holding what is defined as client money, which is fees, money for fees and disbursements in your business account. We've also, like I said, issued guidance on firms that are operating a joint account. It's quite key that you look at that if you are operating joint accounts. We've also issued some guidance on what does good look like in terms of record keeping. This, we think, is really good for firms that are coming into the market, so for new firms, but also for firms that are holding or receiving client money for the very first time. So it sets out what we expect or what good looks like to us, with some really good examples that have been provided by colleagues from across the business. We've also updated, like I said, our guidance on firms that are thinking of using a TPMA, a third-party managed account. Some of the key questions, or some say the common questions that we get asked, is that will there be guidance on promptly, or what do we mean by the term promptly? Here we're saying that it's up to the firm to consider the circumstances of the case that they're involved in and they're advising on. What promptly means for one client might be different for another, so it's important for you to understand how quickly a client needs access to their money, or how quickly it needs to be moved on to somebody else that's involved in the transaction, so that you can make sure that you are acting in your client's best interests. We also touched on residual client balances, and that's a question that we get asked. And as I said, we will hopefully be publishing our prescribed circumstances in the next couple of months, setting out when client money can be withdrawn from without the SRA's permission, i.e. where it's a balance under £500, or directing you to our professional ethics team where it is a balance over £500. Other questions that we get asked as well is that, as we mentioned on TPMAs, can law firms enter these arrangements now? And the answer is yes, you can. Hopefully this short update was helpful, just to highlight some of the key changes coming through the new accounts rules, but also just highlighting some of the resources that are there. Please get in touch with us if you need help in understanding the new accounts rules, either through professional ethics or contacting us through social media, i.e. LinkedIn or Facebook. Please follow us wherever you can, and if you haven't logged on, please log on to the beta site as well. It shows you how the accounts rules, together with the other standards and regulations that are there, will be displayed, and you can annotate them so they're personal to you as you work through. So thank you for joining us this afternoon. Hopefully this session has been of some help to you. Please send us through your questions and we look forward to hearing from you. Thank you.